I'm Matt Bishar with REIT.com here in San Diego for REIT World 2012. Joining me for this CEO Spotlight is Skip McKenzie, President and CEO of Washington Real Estate Investment Trust. Skip, thanks for joining us.
Thank you, Matt.
So I'd like to start by talking about the fundamentals in your suburban DC office market focus and what impact has the election and all that uncertainty that built up to it, and now that's gone, had on your portfolio?
Well, it certainly has had a negative impact on the market, which, of course, we draft off the market to a degree. Although we've been moderated to a degree. But, we've seen in the Washington, D.C. area 3/4 this year of a negative absorption, depending on what research group you want to buy into. But clearly there's been negative absorption in our market. Now, we've had somewhat of a mitigated effect by that because we're not heavily weighted towards the government. And most of that negative absorption has been as people have waited to see what the effects of the fiscal cliff are and where's the government going and how's that going to affect leasing in the DC area. So it has had a negative impact on a macro level in our region. And we've been fortunate that not that we've necessarily directly avoided government tenants. We don't have a lot of government tenants. 2.5% of our tenant base is direct leases with the government. And even on an overall basis, only 8% of our NOI is related to any sort of government contracting.
And how have the other segments of your diversified portfolio kind of helped mitigate some of that softness in the office?
Yeah, it's been a very important factor, and it's been a mitigating factor and a stabilizing force for RIT over our 50-year history. As an example, our multifamily portfolio is doing extremely well. I mean, we've been operating, throughout this entire period from the beginning of the year and over the last several years in the mid-90s occupancy rates. We've had really good rental rate growth on turnover in multifamily. We've really seen a pickup in our retail portfolio. We're operating in the 92, 93% occupancy and really good rental rate increases when we get leases coming up for renewal. So those have been real stalwarts. And then there's the medical office portfolio. While it isn't as robust as the other two sectors I just talked about, it's a very stable force. It doesn't tend to move high or low. It doesn't peak like the others, but it's been a stabilizing force to that. So it's been a huge positive for us to get us through this, and it's 52% of our portfolio, so it's material.
And I was looking at your website before we did this interview and looking at your portfolio breakdown, and I saw that 48% of your total NOI comes from office, 21% from retail, 16% from multifamily, and 15% from medical office. Is that kind of the constitution that you think you're going to maintain going forward, or how often do you look to rebalance that?
Sure. We've actually been very active over the last couple of years in rebalancing our portfolio. As I'm sure you know, a couple of years ago we sold our industrial portfolio and pared that back, and we feel like we had really good execution on that. And then recently, over the last year, we've announced that we're paring back on our exposure to suburban office buildings. And that's another one. The good news is only 20% of our NOI is suburban office buildings, and we define suburban office buildings as outside the Beltway. So only 20% are suburban office buildings, and not all of those we want to sell. Like, for example, we're very bullish on the Tysons Corner market long term because of the metro going through Tysons, and our biggest single assets in Tysons are West Park projects, 500,000 square feet. So we have announced that we're paring back on suburban office. But on the macro level, when you look at our portfolio, we certainly will probably always be in that 40 to 50% range on office because it's a very office-centric market. It's pretty hard to get away from that if you're going to be focused on DC, and probably some relative equal weightings in the other sectors that we're in. But we're generally pleased at where we are now, but as we had announced, and we will continue to sell some suburban office assets.
Skip, thank you so much for joining us.
Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.